Staying informed about federal regulations is crucial for investors, as changes in laws and policies can significantly impact market dynamics and investment strategies. Here are 10 upcoming federal regulations that could affect your investments, covering various sectors such as finance, technology, real estate, and environmental policies. 1. Financial Transaction Tax, FTT. The idea of a financial transaction tax, FTT, has gained momentum in the U.S. political landscape. This tax would impose a small fee on the trading of financial instruments, such as stocks, bonds, and derivatives. While intended to curb high-frequency trading and generate government revenue, the FTT could impact short-term traders and increase trading costs for investors. 2. Environmental, Social, and Governance, ESG, disclosure requirements. Federal regulators are working on policies that would require companies to disclose more information about their environmental, social, and governance, ESG, practices. Investors focused on sustainable and responsible investing may find these regulations beneficial as they provide greater transparency, helping them make informed decisions about which companies align with their values. 3. Changes to capital gains tax rates. The U.S. government has been considering changes to the capital gains tax rate, especially for high-income individuals. If implemented, these changes could lead to higher taxes on profits from the sale of assets such as stocks, real estate, and businesses. This could encourage long-term investing and discourage frequent trading as investors seek to minimize tax liabilities. 4. Cryptocurrency regulations. With the rise of digital currencies, federal regulators are working on a comprehensive framework to regulate cryptocurrencies. New regulations could address issues such as market volatility, security, taxation, and investor protection. These changes could affect the value and accessibility of crypto investments, while also providing more stability and legitimacy to the market. 5. Affordable housing initiatives. Upcoming federal policies aimed at addressing affordable housing shortages could impact real estate investments. These regulations may include incentives for developers to build affordable housing, rent control measures, or tax benefits for investing in underserved areas. Real estate investors will need to adapt to these regulations, particularly in markets where housing affordability is a key issue. 6. Changes to retirement account contributions. Proposals to alter the rules surrounding contributions to retirement accounts, such as 401ks and IRAs, are on the horizon. These changes may increase contribution limits or alter the tax treatment of contributions, impacting how investors save for retirement. Staying up to date on these potential changes will help you maximize your retirement savings strategies. 7. Regulations on tech companies and data privacy. Federal legislation surrounding data privacy and security, particularly regarding large tech companies, is likely to tighten. New regulations could affect how tech companies handle user data, potentially impacting their profits and stock valuations. Investors in technology stocks should monitor these developments closely, as they may influence the market value of tech giants. 8. Clean energy incentives and carbon pricing. With growing concerns about climate change, new federal policies are expected to incentivize clean energy investments. This may include tax credits for renewable energy projects or carbon pricing schemes that penalize companies with high carbon emissions. Investors in energy, utilities, and industrial sectors may need to adjust their portfolios to capitalize on these emerging opportunities. 9. Healthcare reform and prescription drug pricing. Ongoing discussions about healthcare reform, particularly around prescription drug pricing, could impact investments in the pharmaceutical and biotech sectors. Upcoming regulations may include price caps on medications or policies aimed at increasing transparency in drug pricing. Investors should monitor the healthcare sector for potential changes that could affect the profitability of pharmaceutical companies. 10. Labor and wage regulations. Potential federal wage and labor regulations, such as increases to the federal minimum wage or new labor protections, could influence investments in sectors heavily reliant on labor, such as retail, hospitality, and manufacturing. These changes could affect profit margins and operational costs for businesses, ultimately impacting their stock performance and investment appeal. Understanding how these upcoming federal regulations could affect your investments is key to making informed decisions and minimizing risks. Keeping a close eye on policy changes will allow you to adjust your investment strategy to align with the evolving regulatory landscape.